All right, guys. Here we are again. You have asked, and I am answering. A lot of times I get so many questions about really trading technicals, like related details of how I actually trade. And the funny part is, it's all on my channel already. You have the full strategy, the keep it simple, stupid strategy, the KISS strategy, as I call it. And I have a bunch of videos showcasing trade examples. And this is another video that will showcase another trade example. And I will actually continue to do a couple of those of more recent trades. And the difference is to a lot of stuff that you see otherwise on YouTube is that this is not theoretical. This is no fluff. This is real trades taken on a real public track record account that is verified on a public regulated platform. All right. And I don't shy away from showing bad trades neither, because they are part of the process. And it's important that you understand that. When you get into trading with the wrong expectations, all that's going to happen is that you're going to get fatigued from your wrong expectations, and you're going to focus on the wrong things, and you will never make it, okay? As long as you win more than you lose, everything's fine. Thinking that you will not lose is just a fool's errand. So don't be stupid. Try to be smart, okay? Actually, you don't even need to be that smart. You just don't need to be stupid. So let's move along. Let me move my beautiful face to the side here a little bit, make it a little smaller. So these trades are from my actual track record. So now we're starting the third year. We actually closed the first month with 2.38% plus. We're up in total 118%. 63% winning days, 74% winning weeks. Those are real metrics, real trades, again, something doctored. It's not my uncle's brokerage. It's a UK FCA regulated platform, and it's consistent long term. So, let the data speak for itself. And here's another trade I will show you today. And because I haven't done this in a while, I'm going to start with a bad trade, because everybody wants to show good trades. I show you a bad trade so that you understand that there are no bad trades in reality. Another bad trade. So this is the Kiwi Swissy, and it was a short trade, and it hit the stop loss. So yeah, you could argue wasn't fun, but again, it's part of the process. And I want to show you step by step exactly that I really didn't do anything wrong here. Absolutely not. And that's also something that you need to understand. Just because a trade doesn't work out, if you follow your method that otherwise yields results over the long term and the bigger bulk of data, you just keep going. Don't you ever start to, mess up your system or mess up your psychology thinking that the problem is elsewhere. Sometimes the market doesn't work your way despite all the analysis that you do. And that is okay. That's part of the process, okay? You have to understand that. So, as always, we start with the weekly structure. You can see the weekly structure is actually bearish, right? Like the market came down, and then it tried to go up. It didn't break up to the upside. It broke lower. It had another support area here. It did not break that structure. It went down again. And then now it had actually a correction. And this is where we thought okay, this is interesting. We want to look, because as you know from my other videos, this is a trend continuation type of strategy. So on the weekly, we have a healthy market structure to the downside. And this correction is actually interesting for us because we want to look for, a continuation to the downside. So actually these long wicks to the upside and these zones here that I will explain in a minute a little bit more again, they are what we're looking for. This is the setup that the strategy is actually based on, and that has yielded these results, okay? So next we go smaller on the daily structure. Here you can see the daily structure. Again, we broke lower, we tried higher, we broke lower, and this is where it gets a little bit tricky, because that structure is, compared to here, is a bigger correction, right? Like it goes in the opposite direction. And while these are actually the setups that we're looking for, it could be a little bit clearer. But in this case, you could see it actually respected that zone here, the support area from before. It went up, had a wick, came down. Important to understand is that if this level had broken to the upside on the daily structure, I would not look at the short trade, because it would invalidate the short structure on the daily, okay? But we had this correction, and it respected this structure, and it came back down, and it actually broke this structure back lower. So, and then we had this correction here, which is in fact a point of interest where I would want to short it. And this is in fact what I did. So here we have the 4-hour structure. Now you can see that this correction, that, this part here, you see it now here. And you can see like, okay, we have this ongoing trend upwards on the 4-hour chart. And I know most of you guys look at the 1 minute, 5 minutes. And so this takes a long time, and that's the whole point, that you got to bring some patience for your setups with you. If you want to have clean and good setups and you don't want to get glued to the screen all the time, lose your temper and actually fall habit to gambling type of shit. Sorry for the language. Anyway, so you can see like this structure is actually ongoing. But the really nice part is, after it broke this structure, it respected the upper one and it came back down. And then, as it broke it back down, it did not break it back up here, the 51,149 level. That's a really, really interesting play. Instead, it actually broke lower. So for us, that looks good. That looks interesting. This is what we're actually looking for to trade. And now, if we look at the support and resistance zones, again, what I do is I count these, right? And I showed it to you in the other videos here as well. So you could see like this level here has been respected twice, and on the upside as well. And even those 2 weeks, you can see like if the price had ever closed above this level or this level, especially if above this level, that's why you see this one here, then it would have invalidated the whole trade idea, but it did not. So in fact, you could see like whenever it tried to push up, it showed weakness, it came back down. It tried to go up, it showed weakness, it came back down. So we want to actually sell into that weakness, then back down. And here we have the daily support and resistance zones. And you could see, again, the most important part is actually that this structure here, right? It came back down, it tried to get back up here, it failed, it created a new low, then we had this more lengthy type of correction, which in fact still did not manage to come back up here, okay? And we had this long wick on this area. So that's why my entry is actually around here, and my stop loss is around here, because if it trades above that, I will invalidate the trade, right? It doesn't make sense to stay into it. A lot of times people will, because the whole structure looks so bearish, they will then add to their losers. It's going to come back, it's going to come back, it's going to come back, it's going to come back. And then before you know it, you add more leverage, and you get stopped out. So these things happen, not stopped out, margin out. Your whole account's going to get blown. That's how you blow accounts. Here we have the daily points of interest. Again, important part is here, right? So you see that this candle, closed below that level. We only had that one. So important for us is that this level had remained untouched and unbroken. And this is where our take profit would be, to revisit that low that we had here. So that we have also a proper risk reward type of ratio. I usually go for 1 to 2, as I explained in earlier videos as well. And here we have the 4 hours points of interest. And here, again, counting at which zones did the price actually reacted again and again and again and again. You could see like our entry level here, we had 1, 2, 3 times like a really nice reactions. Our stop loss level as well is an important price zone that you could, it's obvious. You just got to use your eyes, okay? Don't be blind. And down here, that level had been revisited a couple times as well, which is our take profit level, and keeps our risk reward level here quite well in the ratio that we needed and wanted. And now, the dynamic support. Dynamic support is I use moving averages. I explained that as well. So you can see on the weekly, we're trading far below that, which tells us, all right, like nothing much to see here. We're clearly in a bearish momentum on the weekly. On the daily dynamic support, same thing. We're trading well below the dynamic resistance level here, right? And the price is continuously showing weakness. Now, on the 4 hour, you also see something very nice, that when this price corrected, right, that phase that I just showed you, it broke the dynamic resistance quickly, but then came back. So this is what we want to see. We want to see weakness into the attempt to break that, which tells us, hey, a continuation to the downside is more probable. And that's in fact what the price did. So it came back down, it hovered around, it did a new low here. And now what we want it to come back to this point of interest, right? To then take it back down to this one. And that's why here is our sell limit order. The sell limit order at 51,149 I wait for the market to come to me. I don't go in market, because I clearly define my entries, my exits, my risk, my reward, the reasons why I enter, how I react at which levels, and all these things, okay? And this is why you eventually win more than you lose, because you have a method that is statistically sound, the statistical edge that I keep preaching again and again and again. So this would be my entry level. And yeah, that did not work. The price actually did not respect anything. It just massively went up. You can see here on the 4 hour, in fact, and hit our stop loss immediately. It didn't even give us a chance. So these things happen. No big deal. No big deal. But what is the learning here? What could I have improved? And for that, we need to see, what did the market do afterwards? And one second. So as you can see, this is where we got stopped out, right? And afterwards, the market came back down, it hovered around, and in fact, when the market would not have broken the structure down here and had come back here to this point of interest at our entry, I would have closed the trade. This is for me then a trade management rule where I would close at break even. And how could I have gotten a break-even trade if I had looked at this overshooting a little bit more? If I had considered that the price may actually overshoot this point of interest a little bit more, which is where we got stopped out, right here. It's really not a lot. Then we could have remained in the trade and then, got out at break-even with a lot less damage than we actually didn't had. But even the stop loss is not a big damage because, again, I apply sound risk that I take per trade. So I'm not risking the whole account or any of that, obviously, okay? So, but what it means, and those are the learnings of that trade, because I was still, look, this is from January 17th. So that trade setup is still a legitimate one, because remember, on the bigger time frames, we still have that structure in place. And as long as it's not invalidated, I could look at re-entering that trade, but I will pay attention to things like that and adjust my stop loss and actually then also my targets accordingly so that my risk reward stays intact. And that's really the learning of this trade. So it's not really a bad trade per se, but because the setup is good and I might take it again. I actually will take it the next time it comes up, but I will adjust a little more room for the stop loss, especially now that I know that the market is reacting this way in that kind of area. So if the bigger structure remains in place and everything else keeps the setup alive, I'm not afraid to take it again. Not at all, actually. And I will consider the learnings from the first trade. And I'm still okay that I took a stop loss, a calculated risk. Nothing more, nothing less. Just, don't be emotionally overinvested. Keep following your method. Do that on more and more and more and more and more and more trades, and you will have more winners than losers. And again, the track record shows you that you can consistently beat the market, beat the S&P, make tons of percentages with very controlled risk. So that's how trading works in my world. If you like this video, please, leave me a comment, subscribe, share with your friends. I would really like to get more exposure to this information. If you have any questions, any requests, leave them in the comments as well. And I'll see you in the next video. Thank you very much.